Good morning, good afternoon, good evening, wherever you are. My name is Hugh Morris. I'm a senior research partner with Zien Group, and it's my absolute pleasure to be chairing the session today on the Financial Centres of the World 2023 with a focus on Mauritius. Mauritius is an extremely interesting up-and-coming financial centre with a fascinating infrastructure and ecosystem that goes with it. And in the next hour to hour and a quarter, we will be hearing about it from the experts on the ground. Now, we would not be able to bring you these webinars without our sponsors, who enable us to range broadly and widely on a whole series of different subjects. And I would be remiss if I didn't start with failing to thank our sponsors. So thanks to our sponsors, everybody, for enabling us to run this series of sessions. The agenda for today, and I will get out of your way very quickly. There will be a keynote address by the Minister for Financial Services and Good Governance, followed by a session on the non-bank financial services sector, then the banking sector as a pillar of the economy, competitive edge of Mauritius, the Mauritius International Financial Centre taxation, and then a video on the experience of the Mauritius Financial Centre before I bring things together at the close. We have an outstanding panel of speakers delivering these sessions, led off, of course, by the Minister, the Honourable Mahan Kumar Sewraj-Gopal, and we also have Mr. Thakur, the Chief Executive of the FSC, Hemlata Sadhana Sewraj-Gopal, Second Deputy Governor of the Bank of Mauritius, Issa Soamali, Vice Chairperson of the Economic Development Board, Samadhi Jahuman, Chief Executive Officer of Mauritius Finance, and Thierry Koenig, Head of ENS Africa. And I'll get my apologies in now for undoubtedly the massacring of how to pronounce those eminent speakers' names. So at this point, and without further ado, I am delighted to hand over to the Minister for Financial Services and Good Governance, the Honourable Mahan Kumar Sewraj-Gopal.
Well, thank you, Maurice. Good afternoon to you all, speakers and members of the Vantage Club. I must say it's a privilege for the Mauritius IFC to be part of the Vantage Club. We seize this opportunity to extend our warmest thanks to ZDN partners in London, which was instrumental in the organization of this webinar today. At the helm of the Ministry of Financial Services and Good Governance, I would not have missed the opportunity to address you this afternoon to mark the opening of discussions on how to develop the Mauritius profile in the Global Financial Center Index and share with you how Mauritius has today developed into a full-fledged IFC and also on our strategy for the future. Ladies and gentlemen, the Mauritius IFC is now in its 30 years of existence. 30 years at the service of the international investor community, providing predictability, certainty, and stability to its investors. In 1992, the first bricks of the Mauritius IFC was laid when the Mauritius Offshore Business Activities Authority, the MOBA, was created as the regulator for the offshore business activities. MOBA was the predecessor of our Financial Services Commission today. Our goal was then to ensure that Mauritius was a cutting edge, but also a secure and trusted financial center for investors to invest, structure, and grow their funds. In spite of the numerous challenges, Mauritius has relentlessly strived to remain ahead of the curve in terms of adapting to its legal framework to comply with international norms. Today, our jurisdiction is fully compliant to the OECD fiscal standards and has no harmful tax regimes, thus putting the country at a level playing field with other reputable IFCs. Today, our reputation speaks for itself. Mauritius now has a robust and modern AML-CFT framework which adheres to the highest standards when compared to other highly developed IFCs. We have constantly been working to maintain the highest level of business environment. I wish to underscore that Mauritius is amongst only 6 countries in the world to be compliant or largely compliant to all the 40 recommendations of the Financial Action Task Force. And I can assure you that we have taken all necessary actions to sustain this effort. Ladies and gentlemen, confidence in Mauritius remains strong on the international arena, and we continue to build on our strengths. We continue to remain attentive to market and customers' demands to ensure relevance and timeliness of our product offerings. The chair of the EDB, the Economic Development Board, and the CEO of the Financial Services Commission will provide you with further details on our financial services sector development, as well as the new palette of financial products, such as a variable capital company or the new framework for virtual assets through the Virtual Assets and Initial Token Offering Services Act, the VITOS. And I cannot fail to mention that Mauritius takes full advantage of technological developments to ensure that ease of doing business is enhanced for the benefits of clients and stakeholders. The competitiveness of our IFC is dependent on the quality of its talent pool. The Mauritius IFC focuses a lot on its human capital. On the one hand, we have the Financial Services Fund, which is under the aegis of the Financial Services Commission, is responsible for financial literacy. And on the other hand, there is the Financial Services Institute, which is a training arm of the ministry and which mandate is the upskilling of people in this sector. With the assistance of these institutions, we have trained more than 6,000 professionals over the past 2 years. I must say that we also collaborate intensively with the private sector operators, such as Mauritius Finance, to ensure that we have people with the right skill to service the investor community. Our membership to the Vantage Financial Centers and our improved rating in September 2022 GFC index bears testimony that despite many odds over the 3 decades, we have been successful in carving a place for Mauritius on the global marketplace. Ladies and gentlemen, the contribution of the financial services sector to GDP is currently at 13.8%, and we aim to double this figure by 2030. We will realize this objective for many reasons, among which are our global competitiveness, our adherence to international standards and norms, our position in league tables, our political stability, our rule of law, the position of our small island state at crossroads between Africa and Asia, among so many others. Government is committed in providing a conducive framework for the private sector to lead in generating economic activities and look towards the financial sector to strengthen further. The Mauritius IFC has already proved to be the most strategic financial partner in building the Asia-Africa corridor. Let us talk about Africa. There's no doubt you are in the right place to take the conversation forward, as Mauritius will certainly continue to play a decisive and impactful role to unlock Africa's multi-billion-dollar investment opportunities. The Mauritius IFC is key to driving quality foreign direct investment in the continent. After India, Africa is actually the second largest destination for investment from Mauritius, totaling 82 billion US dollars. The investment from Mauritius into Africa represents 9% of overall foreign investment into the continent. Mauritius for Africa will continue to fulfill its promise of delivering on the Africa we want, as envisioned in the African Union Commission's 2063 agenda. Mauritius is amongst the few countries to have such a palette of bilateral instruments such as double taxation avoidance agreements or investment protection and promotion agreements with most of the African countries. Most recently, Mauritius has become a member of the African Continental Free Trade Agreement. As Minister of Financial Services, responsible for global business sector, I can assure you that I will continue to do all I can to support sustainable investment channels through Mauritius and into Africa. And the Mauritian government stands ready to work with each one of you. In the same vein, we will soon be coming up with an environmental, social, and governance framework to ensure that we are driving impactful and sustainable investment into mainland Africa. On the other side, Asia, Mauritius was the first country to enter into a free trade agreement with China and with India through the SECPA. Mauritius has been the biggest contributor to foreign direct investment in India for cumulative period from the year 2000 to 2023. Allow me to share with you my observations following my visit in India last February, whereby I led a public and private sector delegation. During this visit, we realized that Mauritius offerings are highly relevant to the Indian market, especially in building the India-Africa corridor. Ladies and gentlemen, being a tried and tested IFC for the past 30 years, Mauritius continues to pave its way with the provision of innovative and highly competitive products and services. The jurisdiction has established itself as a mature IFC with a strong regulatory framework contributing towards the consolidation of its product offerings. Further, the country provides a politically and economically stable environment while also being geographically and culturally close to the countries in Africa and Asia. For all these reasons and many more, we are confident to see the continued use of our jurisdiction as a preferred IFC for the region. Ladies and gentlemen, I take the opportunity of this webinar to invite you all to come and do business in Mauritius. The Mauritius brand is now a mature IFC, which ticks all the boxes from an investor's perspective. As I mentioned earlier, Mauritius is used as a platform of choice for onward investments across the African continent because we have unflinchingly continued to provide predictability, certainty, and stability to our clients. So with these words, I thank you all for your attention and hand over to you the mic, please. Thanks.
Thank you very much, Minister. Delightful, very impressive to hear from you. I now would like to hand over to Mr. Daneswarnath Thakur, the Chief Executive of the Financial Services Commission in Mauritius, who's going to talk about the non-bank financial sector. Mr. Thakur.
Thank you, Maurice, and thank you for doing this transition. Before I continue, I'd like to highlight that in Mauritius, the financial services sector is regulated by two regulators, and we have on my right the banking sector by the Bank of Mauritius, and the second deputy governor is going to intervene shortly. And whatever is non-banking falls under the purview of the Financial Services Commission. So, ladies and gentlemen, continuing on what the minister has just mentioned, the 30 years of the IFC of Mauritius is an excellent opportunity for us to reflect on the evolution over these years and how we project ourselves in the years to come with respect to our evolving role as a forward-looking regulator and our relevance and importance in the new financial services landscape. Before I dwell deeper on our future strategy, first allow me to quickly brush on the history of the Financial Services Commission Mauritius, which some 22 years back took over the duties and functions of some of the stock exchange of the commission functions, the insurance division, and the Mauritius Offshore and Business Activities Authority, it's called the MOBA. And the FSC Mauritius has since evolved into a mature regulatory and supervisory authority, which regulates, monitors, and supervises the conduct of business activities in the financial services sector, namely the funds industry, the insurance and pension, capital market, fintech sectors, and global business. The second aspect is our approach to supervision, which in some way is unique to our jurisdiction. In Mauritius, we have a two-tiered supervision system in line with our Act, the Financial Services Act, where we have the concept of management companies which are responsible to set up, administer, manage, and provide nominee and other services to companies which propose to hold a global business license or an authorized company, and also to act as corporate trustee and qualified trustee under the Trusts Act. The management companies, therefore, are the first line of defense in terms of their responsibilities under the Act. Thereafter, the FSC Mauritius has its own supervisory powers to supervise its licensees as well as the management companies. This unique blend of delegated control and the management control over the management companies and the retention of supervisory powers within the Commission gives this jurisdiction a very unique selling point. The third aspect which I'd like to bring your attention to is the breadth of our products that are aligned with international best practices. While I'm not going to list all of them, we have got quite a number, I would like to highlight the new ones, which include the variable capital companies, the virtual asset services providers, fintech services providers, global shared services as well as family offices. So now let me come to the initial thread of my intervention. In order to keep pace with the market environment recommendations of the international standard setters as well as regulatory and supervisory experience, we have developed our strategic plan, which ensures the development of our sector, and it is based on 9 pillars. Namely, we have in our plan to develop Mauritius into a center of excellence for cross-border finance, trade and investment, to develop enabling legislation and regulatory frameworks, optimize organization performance, carry out enforcement actions for whenever it requires, risk management and financial stability, look into the future, that is recruitment and capacity building, capitalizing on new technologies, international cooperation and sharing of information, as well as rethinking our communications and financial literacy strategies. While we have recognized fintech to be one of our pillars of growth, we have also recognized that going forward, technology is going to be omnipresent, cutting across the different current traditional sectors, whether it is insurance, capital markets, and whether it is going to be with respect to the fund sector, all will be impacted by the disruptive technologies which we are already experiencing. And in order to be able to compete in the future, we had to ensure that our internal processes are optimized and are technology driven. And on that score, over the past 3 years, we have intensively worked towards going paperless, going towards risk-based approach, and towards ensuring that we have got systems based on efficient data exchange to carry out licensing, supervision, and enforcement actions. As I already mentioned, we have developed fintech as a pillar for future growth, and we have very interesting licenses which are already up there, such as security token offerings, peer-to-peer lending, and crowdfunding. Recognizing the actual existence of transactions in virtual assets and the risks of money laundering through such activities, we have, in line with the FATF recommendation 15 on new technologies, come up with the virtual assets and initial token offering services, which is the Vitus, as it was mentioned by the minister. And this act has allowed us to tick all the boxes of compliance over the FATF, that is the 40. And the enactment of the Virtual Assets and Initial Token Services Act has allowed us basically to fulfill 2 obligations. One, I mentioned the regulatory framework for the virtual assets, but at the same time coming up with a number of licenses, and we have 5 in it with respect to the virtual assets broker dealers, the virtual asset wallet services, custodian, advisory services, as well as marketplaces. We also, within the act, recognize the issuance of initial token offerings in a regulated space. Going forward, we have also issued at this point license to 6 entities within the virtual space, and that at the same time we have not neglected our traditional forte, which comes on the license base in the funds area. I have already mentioned about the variable capital companies which were recently introduced, and in addition in 2021 we introduced the securities real estate investment trust, or the REIT, as we call it, and which provides a comprehensive regulatory framework for the operation of the real estate investments in Mauritius. And with respect to our insurance sector, we are establishing a regulatory framework for reinsurance, one that sets Mauritius as a jurisdiction of choice for reinsurers to domicile and to attract insurance business. The FSC is also finalizing the regulations on third-party captives, and we are working towards equivalence with South Africa's solvency asset management framework for the benefit of Mauritian global sector in conducting reinsurance business with South African domicile insurance companies. In all these aspects, we also have on focus the investors that come to Mauritius, and with a view to improving our processes and reducing turnaround times when it comes to applications. We have recently improved our offering system, whereby we are processing applications on a fast-track basis based on the, or rather leaning on the responsibilities of the management companies, which under the Act have to provide the first line of defense, and therefore we are able to process a number of applications in a much faster rate. I can at this point already announce that for any completed file that comes to us on the funds area, we are able to issue the license within 10 working days. And that's a commitment that we take from our side on the fund space. Also extended is the technology area, or the fintech area, where we are coming up with an enhanced approach of in principle license, which is basically a test bed for the service providers to come up with a final product within a given time frame, and therefore they can embark on the processes by providing to us the relevant certificates that we require from independent providers on the audit of the systems. And while we are engaging on all of these fronts, we are still maintaining a sustainable AML CFT framework. And we have set up a robust risk-based approach to supervision, which allows the FSC to execute its risk-based supervisory plan through different supervisory engagements, including on-site inspections, off-site reviews, and thematic reviews to assess the level of compliance among the FSC licensed financial institutions. To this effect, the FSC is able to carry out its supervisory engagement through the conduct of about 350 on-site inspections, which means also about 650 off-site reviews every year. The FSC also provides guidance and up-to-date information on money laundering and terrorist financing risks and obligations to its licenses, with around 30 various outreach sessions every year. This has also allowed the FSC to take effective, proportionate, and dissuasive sanctions to non-compliant licensees. And to this effect, a number of show cause letters were issued, referrals were made to the enforcement and settlement committees, or revocation of licenses as well. Our risk-based approach involves assessment of a large amount of dynamic data set. The FSC has launched in August 2021 our trademark FSC One platform, which is the digital portal through which the regulator interacts. And by leveraging on this advanced information system, the FSC is able to continuously collect both financial and non-financial data and build up a database of information to conduct quantitative as well as qualitative analysis for a better holistic understanding of the risk profile of our licensees. So on a concluding note, I would like to mention that as we celebrate this important milestone of the 30 years of the MIFC, as the integrated regulator for non-bank financial services, the FSC's focus remains the full-fledged supervision as well as improving and streamlining on our licensing processes. As beautifully laid down by Sir Charles Darwin, that is, the fittest survives, and the fittest is the one which can easily adapt to the changes in its environment. We have constantly adapted and evolved over the past. So the best years of our international financial center are yet to come, and it is without doubt that the next 30 years hold promises beyond imagination. Thank you very much.
Thank you very much, Mr. Thakur. Now, as Mr. Thakur said, the supervision of the financial services industry in Mauritius is divided into non-banking and banking. And now I'm delighted to introduce Mrs. Sewraj-Gopal, Second Deputy Governor of the Bank of Mauritius, who will be talking about the banking sector as a pillar of the economy.
Thank you very much, Mr. Morris. So, ladies and gentlemen, good evening, good morning to wherever you are. I will give you a brief expose on the banking sector of Mauritius. First of all, I'd like to give you this piece of information that the first bank in Mauritius, the Mauritius Commercial Bank, was actually set up in 1838. And this is a major achievement and actually shows the evolution of the financial system in Mauritius. The Mauritius jurisdiction has a very well-developed and a sound financial system with a strong regulatory framework. Compared to its peers in the region, especially the African region, Mauritius is well-banked, with only 10% of the population unbanked, and as such, financial inclusion in Mauritius is not a major concern. The country is home to 19 banks, amongst which we have 6 domestic-owned banks, 10 foreign-owned banks, and 3 branches of foreign banks, with cumulatively over USD 45 billion. International banks like HSBC, Standard Chartered Bank Mauritius Limited, Standard Bank Limited, as well as Absa Bank, formerly the Barclays Bank, a Pan-African bank now, they have their footprint in the local context. In order to further strengthen our commitment to reinforce the position of Mauritius as a center of choice, excellence, and repute in the region for financial services, the Bank of Mauritius, in collaboration with the banking sector, has commissioned a report on the future of banking in Mauritius. This report charts out the roadmap for the banking sector in the next decade, with the vision to enable it to deliver first-class services to the African and Asian customers, and also to act as one of the main bridges connecting the rest of the world to Africa. The Honorable Minister has already given you a flavor of the number of trade agreements that we have signed over the past year with Africa and India. The Banking for Your Future initiative targets specific strategic areas. In terms of market access, they cover the Asia and the Africa global business strategy. Some measures will assist the banking sector in demarketing itself in terms of the range of products and services, as well as the delivery channels. Other initiatives, they are related to the fundamental building blocks that we believe are deemed critical to enhance the attractiveness and soundness of the banking sector, namely the regulatory regime, digitalization, and ESG. These measures recommended in the strategic roadmap are concrete and pragmatic. They have the potential to support the change process in the banking sector and will enable it to keep pace with international development. I'll be now talking briefly about the resilience of the banking sector, especially over the pandemic period. The Mauritian banking sector is well capitalized with adequate liquidity buffers and satisfactory asset quality. As a testimony, our banks remain sound and resilient in the wake of the COVID-19 pandemic with manageable levels of non-performing assets, commonly known as the NPLs, the non-performing loans. Banks continued during that period to hold strong capital and liquidity positions, and this allowed the sector to bounce back and support economic recovery. The preservation of financial stability and employment during the pandemic-led turmoil was the outcome of the collective efforts of the Bank of Mauritius, the banking sector, and the government. The resilience of the banking sector was underpinned by a series of conventional and unconventional measures, including those aimed at providing temporary flexibility with regard to the regulatory compliance rolled by the bank and various assistance schemes put up by the government. The proactive intervention of the Bank of Mauritius in the foreign exchange market helped to contain excessive volatility in the exchange rate of the rupee. Our foreign exchange reserves remained at that time at a satisfactory level, and it also contributed to preserving market confidence. Today, we stand at a commendable import cover of 14 months. With the economy recovering from the setback of the pandemic, the Bank of Mauritius achieved a smooth exit, or you may term it as unwinding, of the accommodative measures that we took during the pandemic. And this was achieved in June 2022. And this was a seamless process. Even though we have successfully circumvented the blows of the pandemic, like any other economy in the world, we have yet to confront other challenges such as high inflation and global uncertainties. To combat the inflationary pressures, the Bank of Mauritius has recently revamped its current monetary policy framework, which dated back to 2006, with a new forward-looking, flexible inflation targeting framework that aims at enhancing the effectiveness of the monetary policy, especially the transmission mechanism. A sound regulatory environment, the result of decades of reforms, supports the country's banking system. The Mauritian banking sector is strongly committed to apply international banking standards. The Bank of Mauritius endorses the standards of the Basel Committee on Banking Supervision, including the Basel III framework and the core principles for effective banking supervision. The bank is also a member of the Basel Consultative Group, the BCG, since February 2021. The guidelines and instructions issued by the bank are constantly reviewed in line with international best practices and standards of the Basel Committee. In fact, the Bank of Mauritius has already kickstarted an exercise to incorporate the latest Basel III post-crisis reforms in its regulatory framework. We are also enhancing our supervisory framework with the assistance of the World Bank, and this has reached an advanced stage, especially in the implementation of a risk-based supervisory framework. Further, in the battle against money laundering and the financing of terrorism and proliferation, the Bank of Mauritius has committed itself to the international standards on combating money laundering and financing of terrorism and proliferation, issued by the FATF, the Financial Action Task Force, and also to its mutual evaluation procedure. Recent sustained efforts to address the deficiencies in the AML-CFT controls bore fruit, as we all know, with the swift exit of Mauritius from the FATF list of jurisdictions under increased monitoring and the EU blacklist. A key component of the financial system, and even more so of an IFC, is undeniably the payment system infrastructure. And in Mauritius, we have an effective, resilient, and state-of-the-art payment ecosystem. The MAX, the Mauritius Automated Clearing and Settlement System, which is a real-time cross-settlement and multi-currency system for all interbank fund transfers in the country, and also the PLAC, the Port Louis Automated Clearing House, which operates a bulk clearing system for electronic clearing of checks, ETFs, and direct debit transitions, are the backbone of our payment system. The bank also took a major step in the transformation of the retail payments in Mauritius with the launch of the MOCAS, that is the Mauritius Central Automated Switch. It is a state-of-the-art digital platform for routing payments among operators on a 24/7 basis. To give further impetus to the bank's vision to shift from a cash-dominated economy to a digitalized one, the bank introduced a national QR code branded MOCAS QR code, designed to be fully interoperable and allow the public to make payments to any merchant location. The bank is further developing an infrastructure to integrate all government payments to support the digitalization of government services, and this is already operational. Our payment system infrastructure also extends beyond our borders. The bank is the settlement bank of the REPS, the Regional Payment and Settlement System, and settles transactions in US dollars and euro on the same day for 9 central banks in the COMESA region, namely those of the DRC, the Democratic Republic of Congo, Egypt, Eswatini, Kenya, Malawi, Rwanda, Uganda, Zambia. We are also a participant in the SADC RTGS, formerly known as CIRES, a regional cross-border real-time cross-settlement system in the SADC region. Work at the moment is ongoing with the National Payment Corporation of India, the NPCI, to connect the payment switch in India with MOCAS, with a view to bring interoperability in the payment space of both Mauritius and India. As an international financial center of repute, our jurisdiction is open to innovation, while ensuring at the same time that appropriate safeguards are in place for new ideas to come to fruition in a safe and sound environment. Banking, as we all know, is no longer a brick-and-mortar affair. The digital shift of our banking landscape is now a sine qua non for the bank's survival. Besides, the pandemic has been a technological catalyst for the financial sector as a whole. Digitalization of the financial sector, it has always remained high on our agenda, and we recognize that the modernization of the banking sector and changes in the relevant legislative and regulatory frameworks, they need to go hand in hand. And to this end, a multilateral FinTech committee was established in November 2020, with a view to drawing up a plan for the financial industry to develop a propitious regulatory framework to embrace FinTech. And in the same year, the bank, through its legislative powers, was empowered to license digital banks, that is, banks which can carry on banking business exclusively through digital means or electronically. The bank also recognizes that cloud is an enabling infrastructure for banks and acknowledges the numerous benefits that it encompasses. To this end, we consulted the industry, cloud service providers, and experts on a more extensive regulatory framework for cloud services and unveiled our guideline on the use of cloud services in September 2022. The digital transformation of the banking sector, you will agree, will be incomplete without enablers of digital onboarding. Further to the proclamation of the VATOS Act, the Virtual Asset and Initial Token Offering Services Act 2020, in February 2022, the financial institutions are now able to undertake CDD, customer due diligence measures, through independent digital identification system by virtue of the provisions of the Financial Intelligence and Anti-Money Laundering Act. We also wish to highlight that significant progress has been made in the implementation of a central KYC system, which will further facilitate the digital onboarding process, as information on individual and corporate entities can easily be counter-checked from source, that is, from government agencies and utility bodies. In parallel, the regulatory and supervisory framework with respect to virtual asset is also being enhanced. The Bank of Mauritius issued a draft guideline for virtual asset-related activities in November 2022 for public consultation, with a view to assist banks in adopting a sound and prudent approach when dealing with virtual assets. The Bank of Mauritius is also cognizant that the financial services sphere, which was traditionally occupied by banks, is now slowly being redefined with the emergence of non-bank financial service providers, including PSPs, payment service providers, and fintech companies that have the potential to bring innovation and foster competition in the financial sector. Against this backdrop, the National Payment System regulation was put in place in June 2021 to ensure a competitive, level playing field while setting out standards to ensure a fair and uniform operating environment. Since then, the Mauritian financial landscape has already seen the entry of 3 payment service providers licensed by the bank. To take innovation a step further, the bank is currently working towards the establishment of a fintech innovation hub and digital lab. These initiatives will accelerate the development of fintech and support the Digital Mauritius 2030 strategic plan, with the ambition of making Mauritius a regional fintech hub. Before I complete, I'd like to talk about a very recent threat that has been heightened over the past year, especially with the Russia-Ukraine war. We are fully conscious that our ongoing digital transformation exposes banks to heightened, increased levels of cyber threats, whereby new vulnerabilities are being introduced for cyber criminals to exploit. The operational resilience of banks thus remains high on our priority in the supervisory agenda. Along the same line, the bank is consulting the industry on an enhanced framework for cyber and technology risk management. With the assistance of the IMF, we are now developing a cyber risk and resilience strategy, which will comprise two parts: an internal strategy for the bank as the central bank and hosting critical payment infrastructures, and also a strategy for supervising our licensees and also for collaboration with local and international stakeholders. And our mission here is to promote the efficiency and stability of the Mauritian financial system through robust cybersecurity capabilities and expertise, collaboration and information sharing, and comprehensive oversight, and of course, building our sector as a regional hub of cyber excellence. Last but not the least, as a further testament of our position as an IFC of choice, the Bank of Mauritius has been very active on the climate agenda since 2020. Our efforts in addressing climate-related risk resulted into the setting up of the Bank of Mauritius Climate Change Center in October 2021. We have since rolled out a prudential guideline with a view to helping institutions understand, identify, assess, monitor, and mitigate climate-related and environmental financial risk. Our guideline also looks at climate change from an opportunity lens. In fact, we have requested financial institutions to identify opportunities that would likely arise from the transition to a low-carbon and more circular economy, and consider them in their strategies and thinking process. I'd like now to talk about a new guideline that we recently issued and which would be of interest is the private banking. We are now looking also into promoting banking business models other than conventional banking. In fact, with a view to developing a conducive environment to attract both local and foreign investors to set up business in Mauritius, we have revamped our guideline for private banking business, and this was issued in December 2021. The guideline sets out the regulatory and the supervisory framework applicable to banks conducting private banking business. The interesting part of this guideline is that it has been redrafted in light of suggestions made by private bankers, the relevant stakeholders in the local industry, as well as international experts in the domain. And the guideline provides flexibility regarding significant ownership and board subcommittees, and prescribes a lower minimum capital requirement of 200 million instead of 400 million at the start of operations. I hope, ladies and gentlemen, that the above expose has given you an insight on our banking sector, and I thank you for your attention. Thank you.
Thank you very much, Mrs. Sewraj-Gopal. It's now my pleasure to introduce Mr. Issa Somali, who is Vice Chairperson of the Economic Development Board, who is going to look at the competitive edge of the Mauritius International Financial Centre.
Thank you so much. Mr. Taku, CEO of the Financial Services Commission, Mrs. Emlata Sadna Sewraj-Gopal, Second Deputy Governor of the Central Bank of Mauritius, Mr. Hugues Morris, Senior Research Partner ZN, members of the press, distinguished guests on the webinar today, ladies and gentlemen, I wish you all a very good afternoon. Let me, at the outset, thank the organization and the Financial Services Commission, the FSC, for facilitating this webinar session for us to showcase from the EDB the attractiveness of the Mauritian jurisdiction. Ladies and gentlemen, at the EDB, I'm very pleased to show you today and showcase the competitive edge of the IFC. First and foremost, the EDB represents the strategic arm of the government of Mauritius, an apex body operating under the aegis of the Ministry of Finance, Economic Planning and Development. The core mandate of the EDB to promote Mauritius as an attractive investment and business center, a competitive export platform, as well as an international financial center. Ladies and gentlemen, the pandemic has had its negative impact globally. However, I must say that Mauritius has been highly resilient and managed to bounce back. The financial services sector is in fact one of the most vibrant and performing sectors of the economy, contributing to 13.8 GDP and a growth rate of 3.7 in 2022. Ladies and gentlemen, Mauritius is a jurisdiction of substance with a wide range of incentive for investors. We do understand client needs, promote innovation, and adhere to the highest compliance norms and standards. Allow me to showcase to you some of our key competitive edge. Firstly, corporate governance. As a jurisdiction, we have been foremost in adhering to the best international norms, practices and standards as highlighted earlier by our Honorable Minister and our regulators, namely the Central Bank and the FSC. Moreover, our key financial institution and regulatory bodies played and is playing an important role in maintaining the soundness and resilience of the Mauritius IFC. Secondly, Mauritius, being a multicultural and a pluri-ethnic nation, is strategically located with key attributes, notably its global connectivity, innovative and state-of-the-art technological infrastructure, diversified economy, dynamic business regime, and safe environment to do business. It is worth noting that the country has won several international accolades, which is known in the public domain. Mauritius is also the country in Africa to be recognized to having an investment grade. Year on year, several major reforms have been put in place by the government to further enhance our competitiveness and performance. The reforms have brought positive results and have played a pivotal role to attract foreign direct investment in the jurisdiction. It is noteworthy to showcase the key attributes and economic track record of Mauritius as a sense of trust, stability, confidence, which is highly acclaimed by the international investment community. Thirdly, as part of our continued pursuit to increase the offering of Mauritius and to strengthen its position as an undisputed platform of choice for Africa, Mauritius has signed a network of bilateral agreements with major African countries, including the double taxation avoidance agreements and the investment protection promotion agreements. Mauritius is also a member of the regional blocs like South African Development Community, the SADC, the Common Market for Eastern and Southern Africa, the COMESA, thus allowing us to have preferential market access in these countries. Mauritius has also signed several free trade agreements, inclusive the SECPA with India and the FTA with China and the African Continental Free Trade Agreement also. Fourth, ladies and gentlemen, in the latest ranking published by Le Figaro recently, Mauritius was recognized as the fourth best country in the world to retire and has been acknowledged as one of the safest countries for digital nomads in 2022 by Kayak's Work Forever Index. This endorsement by reputed indices be a testimony of wide array of advantages that exist for foreigners, retirees to enjoy a relaxed work-life balance and provides the proper ecosystem for investment. Last but not least, ladies and gentlemen, it is noteworthy that international investors have used Mauritius IFC platform to invest in Africa and to significantly contribute to the substantial increase in prosperity in Africa, along with job creation, development, and poverty alleviation. Africa in itself represents a huge market base and possesses all the prerequisites to become a major growth pole of the world. With the growing importance of Africa to both China and India, Mauritius is reaffirming its role as the star and key of the Indian Ocean. A large proportion of all Asian outward investment lending into Africa is already being structured through Mauritius. A study entitled Facilitating Growth, Employment and Prosperity in Africa, produced by Capital Economics in August 2021, documents the value of Mauritius as an IFC for Africa. The study highlights key main points. Number one, more than 80 billion of investment have been structured from Mauritius into Africa. Number two, foreign investment mediated by Mauritius support 4.2 million jobs in mainland Africa, representing 0.6% of all employment in the continent. And the last one is the noteworthy 9% of foreign direct investment into mainland Africa is mediated by Mauritius and generate around 6 billion revenue of tax revenues for African government each year. Ladies and gentlemen, with these few words, I'm convinced that Mauritius is indeed your go-to jurisdiction for investment and business. The EDB pledges today its unflinching commitment to support, to accompany you to assert your footprint in Africa on the Asia-Africa route. Thank you very much.
Thank you very much, Mr. Somali. I'm now delighted to introduce Mr. Samadi Juman, who is the Chief Executive Officer of Mauritius Finance, who is going to give an overview of the taxation arrangements in the Mauritius International Financial Centre.
Thank you, Mr. Maurice, and good morning, good evening, good afternoon, depending on which part of the world you are joining us. I think it's a bit difficult to intervene after so many speeches, and I will try to also brush on my presentation because it's also a technical aspect which not everybody is comfortable with. So I'll try to make it as simple as possible, and we'll try to be within time. We're also running a bit behind schedule at the moment. So basically the Mauritius tax framework, and I think a lot has been said and mentioned in the press over the years. I think it's important to note that the Mauritian tax framework is actually compliant and complying with all requirements of the standard setting bodies being OECD, the EU, and others. So as it stands today, Mauritius has never been on any list, whether it's the EU or the OECD, in relation to tax matters. Since 2018, there has been major changes in our tax legislation, and Mauritius is part of the inclusive framework of the OECD, along with 100+ countries. So we're also signatory to the BEPS inclusive framework and the multilateral instrument, and we also have a compliant rating in relation to tax transparency. So in addition to that, we have signed the FATCA agreement with the IRS, and likewise we have done a similar exercise in relation to the common reporting standard, whereby more than 130 countries are automatically exchanging information on tax account holders across the competent authorities around the world. Now, coming back to what my friend Isa mentioned earlier in relation to the double taxation agreement, as you can see, Mauritius has signed in excess of 50 double taxation agreements with different countries in the world. But the map that you see right now is the focus on how many agreements has been signed with the African continent, along with the IPPAs, which is the Investors Protection Agreement. In terms of the general rules for the tax framework in Mauritius, we have a headline rate of 15% taxation for all companies, irrespective of the category of companies, whether you're domestic, you're a global business. There's no ring fencing per se. They all have a headline rate of 15%. And I will come into details later on what other incentive the companies have. and what sort of category of income that are taxed differently. So companies are taxed on their worldwide income, and non-resident companies are actually taxed only on the Mauritian source income. Now, how does a company become resident in Mauritius? Is by either being incorporated, or more importantly, is being centrally managed and controlled in Mauritius. However, if you have a company which is incorporated in Mauritius, but it is centrally controlled and managed outside of Mauritius, it will be considered as non-resident, in which case they will be taxed only on the Mauritian source income. And the good thing is, as you are aware, Mauritius don't have capital gain tax regime. So basically, any profit from trading of shares of securities are considered as an exempt income. Now, going back to the charge where the company is imposed is on the chargeable income, which consists of the profit of the organization along with the passive income, which together with any expenses that the company would incur in the normal businesses will be deductible for tax purposes when computing the chargeable income. And there's another advantage for companies that are incorporated in Mauritius or taxed in Mauritius is to take advantage of the foreign credit tax credit system, which we have in relation to tax suffered outside of Mauritius. That would be basically would include any withholding tax suffered on foreign source income. In order to claim the foreign tax credit, I take the example of dividend. The company would have actually at least a shareholding of 5% to be able to claim the underlying tax of the foreign credit tax suffered in other jurisdictions. However, the company has another choice of either claiming the foreign tax credit, or they can claim an 80% exemption on a specified income stream, such as foreign dividend, interest, and investment advisory and investment management. So the next diagram will give you a better indication in a nutshell the tax, how the Mauritian corporate is being taxed. So as you can see, a company can be either a domestic, a GB, or a company trust. They're all taxed at a flat rate of 15% on the chargeable income. Then they can either claim the 80% of exemption on a specified income stream, which include, I mentioned earlier, interest, dividend. However, they need to meet the substance criteria in order to be eligible to claim the partial exemption of 80% on income. They have the other choice also. In the case where they have actual tax suffered, they can go down the route of claiming the foreign tax credit. But they can't claim both at the same time. They can claim either the foreign tax credit or they can claim the partial exemption. So I won't go into details of the tax credit and the partial exemption, which I have in terms of slide in a sense of time, but this will actually give you the indication how and where you can claim this credit. Likewise, if you're claiming the partial exemptions, depending on the category of income, what are the conditions when claiming the partial exemptions? So I'll quickly move into the next slide in relation to tax holidays and incentive. So as I mentioned earlier, Mauritius tax regime has actually gone through the peer review of the OECD and the EU. All the tax holidays and the incentive that you see there is actually compliant with the requirement of the EU and the OECD. And we have several tax holidays and incentive in relation to different type of activities. Some of them will be having a 5, 8, or 10 years as applicable, depending on the activities of the business, obviously subject to certain condition and a criteria and substance at the same time. So a list of activities would include like a peer-to-peer lending platform. You are entitled to 5 years tax holiday. You have a global treasury activities license. Once again, 5 years tax holiday, which is subject to employment and substance requirement. Likewise, the innovation-driven activities, you are entitled to an 8 years tax holiday subject to development and research taking place in the jurisdiction. You have a single family office and a multiple family office license, which whereby once you meet all the criteria and conditions, you're entitled to a 10 years tax holiday on the activities of the family office license. a global headquarter license regime. Once again, this one is the 8 years tax holiday. And you equally have a tax holiday for fund managers who are managing assets and the portfolio under management of a minimum of $50 million. Obviously, once you get the certificate from the regulator confirming in terms of meeting the criteria and the number of assets under management based on the audited accounts. So other tax incentives that you might have would be includes in relation to double tax deduction when you're doing your R&D in relation to a medical a research, and you can also claim double deduction on the acquisition cost of patents and franchise, and qualified R&D also incurred on market research. So these are incentives and tax holidays that we have in Mauritius, depending on which activity and where the company is actually operating. So I think in the essence of time, I've reached the end of my slides, and I'll be happy to take any question. I don't know whether we have time now, or maybe we'll take it later on after everyone has intervened. Thank you.
Thank you very much, Mr. Jamon. So we now have a video from Mr. Thierry Koenig, who's head of ENS Africa, to describe his experience of the Mauritius International Financial Centre.
Thank you very much for giving me this opportunity to speak to you today about how we went through a journey over the last 30 years, our Financial Services Centre. 30 years ago, we started the launch with a conference in Grand Bay, and I recall there were two main themes that were very important. One is the perception about Mauritius, and the second one was about certainty in our laws, since we were a hybrid jurisdiction having both civil law and common law principles. Two interveners marked me. One was Mark Mobius, the famous fund manager, who admitted that he had come to Mauritius out of curiosity. We were the new kids on the block. We were the first ones in the Indian Ocean, and we were starting with a fresh piece of paper. And he told us as he started that from his encounter with a taximan and the hotel personnel, how impressed he was by the education of those who he were meeting. And then tiny Mauritius, as he thought it was in fact twice as big as Singapore and Hong Kong put together. He also realized that Mauritius had been a world leader in sugar technology, a world leader in textiles, had made a fabulous tourism industry, and had come out of the independence with an economic boom, the first one in Africa. So that his perception about Mauritius changed completely. And the second one was Philip Baker. He started his presentation with a cartoon of a little island in the middle of the Indian Ocean with people sunbathing. And suddenly we entered into the Financial Services Centre, and there were sharks all around. And the message he was passing was that unless we have a very strong legal profession and a very strong judiciary, those sharks would have been a big problem. And we had to convince people that our hybrid system was in fact the challenge we had to face. So Mauritius went about it where the challenge turned out to be one of our big strengths. We started by having the limited life companies. We had limited liability companies, partnerships incorporated, so that we had the full range of French and English law entities. The same for enforcement, the same for securities. We had, in 2000, we revamped completely the Companies Act. With Professor Mackenzie, where we adopted the New Zealand type of Companies Act. Then it followed with the Insolvency Act, where we also revamped completely everything. And a few years later, we introduced the international arbitration, where we had a the International Arbitration Center. We introduced a state-of-the-art legislation, then rules. And we went on like that until very recently, where we introduced laws and being the forefront of legislation. And as you would have heard by the interveners before me, that we are now having cryptocurrency legislation and virtual asset legislations, where we are world leaders, among the first who have introduced such legislation. All this to say that the laws in Mauritius have played a significant part in the development of the financial services sector during this journey of the 30 years. And to put stress on how important this is, I will recall the discussion I had at the very beginning of the journey. A discussion, it was with Clifford Chance and legislators, and Sumitomo Bank, who was the lead bank for a very important energy project, which was a non-recourse project financing. And when legislators and Clifford Chance understood how our laws and this hybrid system worked, they called it the nuclear power of Mauritius. And in fact, once you understand how the system works, we do have this nuclear power. And this word and this expression remain for the 30 years. And this has been one of the backbones of our success. Do we have challenges still? Yes, we do have. We still have the problem of perception of a tiny island and a paradise island and so on. We still have on the judiciary the same challenges that has been throughout the world nowadays. Is the mismatch between the time it takes to go to court and get a judgment and the business realities. This, if we get this right, and we bridge the gap between the time it takes, we will have the edge and we will still be leaders in the field of law in the financial services. And when I look back to this journey and I look back at how it was in the legal profession with a few generalists, and today how it is a sophisticated jurisdiction with over 1,500 lawyers, not all of them, but many of them specialize in their field. I look at the long generation, and I'm certain that this is a basis of our great success to come in the years to come. Thank you so much for giving me this opportunity, and back to you.
Well, ladies and gentlemen, I hope you have enjoyed what has been a tremendous exploration of the Mauritius International Financial Centre, led off by the Minister and supported by the other speakers. Certainly there are some great insights there that I know you will take away. I would like once again to thank our sponsors, without whom we would be unable to launch these webinars. I hope you have found the time valuable today. I certainly got a great deal out of the presentations from all our contributing speakers, and I would like to thank them all very much indeed for giving up their time and making this material available to us today. And I would like to thank you as the audience for being here with us. And I wish you a tremendous rest of the day, good afternoon, good evening, wherever you are in the world, and thank you once again for attending today.